Zoom to YouTube, and here we have it. See, oil has bounced to the upside again. Russia has agreed to cut production, so might see some further moves up on that one.
Is this in the meetings, the OPEC meetings?
Yeah, no, I don't think so. I think it's just an
Right.
announcement that they're willing to cut some production. So they
wouldn't be meeting yet, would they?
I don't think
meet?
so.
In
Even
Brussels?
though oh, you're talking about the European meetings.
OPEC. Where's OPEC
OPEC.
meet?
I
that's
thought
gonna be
OPEC was
online, isn't it?
today. Actually,
It is
maybe
today.
it was. Yeah, I thought it was on Zoom today, but I'll have to kind of get up to speed with that. I know it was scheduled for. I'm pretty sure it was scheduled for today. Let's have a quick
It
look.
surely was, yes. But yeah, whether it's taken place or not, to be honest, I don't know.
All day OPEC meeting, yeah. Actually, quite a lot of data today, so I'm not sure what that
we're
means.
likely to see the CAD bouncing around a bit, I would imagine.
So I was going to, in fact, before we do anything else, good morning, everyone, by the way, and good morning, Kumar. Good morning, Jeff, too.
Good morning,
before
mate.
we do that, let's get to the FTSE, because we had a trade in the FTSE yesterday at this level, and I was suggesting you could have put stops at this level. Obviously, the highest point is always the safest level because it's a significant level rather than just trying to play a trend. So if you did put stops up here, you would now be stopped out. If your stops are at the highs, then you may as well hold on to what you've got here. There may well be a little bit of a holiday bounce. We got basically trading stopped. Today is Friday, effectively, isn't it? So when it comes down to trading, so we might even get a little holiday bounce here.
It's an interesting one because of COVID-19 and everybody's at home. I think the retail traders might still be out in force tomorrow.
Well, the FTSE's closed.
Oh, okay. Yep.
Yeah, so I can't actually trade anything with the FTSE or the futures, but I think maybe buying into the weekend wouldn't be that out of the ordinary. My concern would be, if people bought in this morning, you are trading right on top of this monthly pivot, which is the worst type of area to try and trade into. And also, I wonder, when it comes down to the close of the day, whether everybody just gets out. Holding the market over the weekend has proved to be really dangerous. When it comes down to the last few weekends, it's actually been okay, but it's just been a really bad time to hold trades over the weekend. So I wonder whether
I've got a few decisions to make. I've got a lot of open positions.
Right.
I have to think seriously about that.
Yeah. It's been really difficult. I mean, it does depend, what affects it, but there's been a slew of things, coming out over the weekend or just before the weekend, which has really harmed the trading and the direction to the upside. So I wonder whether people might get out, but we'll see what happens. This doesn't mean that we can't potentially flip for right now and continue moving this, continue to trade it higher for a little while. Still got a bearish outlook, and I'm still holding on to the shorts, but I think it might be time to maybe take advantage of the longs. But we'll see. It's difficult. We'll get to the pound trade in a moment, but let's have a look at the charts and see what we're surmising here, because the longer term, this is just an hourly chart here, and we've seen it really. There are little trends within the range in the hourly chart. So there's a there's a range here, and there was a few patterns going on, but you can see that there was a low there, a lower high, a lower low, a lower high, but then it held again. So it's been bouncing really here. So we are kind of caught in this range right now, and we'll probably see the top end of this range at some point in the first session. Whether we get through that range, I don't know. We got news and data out later, so that might just be enough to kind of cage it in. But for right now, the market certainly seems to want to go higher. There's not really a lot holding it back. It liked the Fed minutes. There we go. Market's just opened up, and we're pushing right to the top end of the range again. And I suspect if we come down, maybe to this level, we'll probably continue to buy up at this particular stage. There's some fairly solid buy signals, but we are, as I say, just kind of caught in a bit of a range. Many people don't like trading inside the range. And my particular preference is I prefer to trade it short at the top of the range and long at the bottom of the range.
Hell yeah.
That's the way, isn't it, mate? But, we'll see what happens. If it breaks out the range, we're going to have to let it go. If it comes back and gives an opportunity, then maybe that can be taken. But it's going to be a strange market today, I suspect. Let's get to the pound trade. And in actual fact, before we do that, actually, the pound trade is quite important to do now, isn't it, mate? So let's do that. And we'll come back to the FTSE in a moment and just do some more analysis on the longer term time frames.
Roger D. Okay, little winner yesterday on the pound. A bigger one than the day before, but not anything you could kind of get on the phone to mum and say, gee, mum, I just won shitloads of money. But a winner nonetheless. Let's see if we can do it again today. As always, we pick the range of the last 3 bars prior to London session. That would be that bar there, and that bar there. This is on the hourly chart, of course. So high of that bar is the top of the range. Low of that bar is the bottom of the range. Let us place an order or two pursuant to those numbers. Okay, so probably likely to be taken in long first. So we'll go, I don't know why I said that. Yeah, bounce off the daily pivot. That's probably why. I'm a little bit ambivalent as to direction today, but let's see. So our high of that bar is 1.24019. Let's call it 1.2402, and we'll add 15 pips to that. So our entry for the long will be 1.2417. It is a buy stop. $1.2417. Stop loss will be 10 pips below the low of the range, which is this bar here, at 1.2360 minus 10, 1.2350 will be the stop loss for the long. Okay, so we just flip those, and if I can remember them, and we'll place a short order as well, 23.50, 24.17. 23.50, 24.17. Does everyone talk to themselves like I do? 23.50, 24.17. It will be this sell stop. 23.50 and 24.17. There we go. So not a massive range today, which is pretty cool. I like little ranges. But we're trading right at the top of it, which is a shocker. That's where I told you guys to take profit yesterday, and I hope you did, on the order that we placed on the 4-hour chart. We'll go through that a little bit later, just to make sure that you're on the same page as I am. Ace, to answer your question, we hope so. What we're actually trading is a breakout of a range. So it really doesn't depend on something else or something other than that. If you feel, however, that over time, and we will feel over time, that we've got filters to add to this particular system of trading, then we'll do that. And if that means that let's say we trade on an hourly chart rather than a 15-minute chart, let's say we don't trade if it's Monday, or we don't trade if it's Friday, whatever the case may be. So at this point, we're trying to eliminate the bad and keep the good, or manipulate it so that we can make it better than it than it should be. I'll put it that way. So it's a beta test at the end of the day, and what we're trying to do is establish something that makes us money consistently. That's what creating a strategy is all about, and that's really why we're doing it here. So I mean, we do this all the time. But this one here is as old as I am. Actually, it's older because I think, no, I won't use that analogy because it's Easter. It's old, but there are many ways to do it, right? A lot of people trade the first candle of London session or a breakout in the first candle of London session. And the reason is pretty clear, because it's the most voluminous, if you like, trading session. That's where all the liquidity is, because most traders are at their desks trading at that time. So that's why we've generally got liquidity everywhere. There's no such thing as a gap or a price that won't get filled, because all the traders are at work, and they're all just like you and I, looking at their charts right now, wondering where the hell's the pound going right now. So to answer your question in short, yes, until proven different. Look, which other pair? I'm going to leave that up to you, because that's your homework. What you need to do as a trader is recognize patterns that recur, whether they be time of day, candle pattern, chart pattern, chart structure, whatever the case may be. When Donald tweets, ready, go, trade in a direction. These are all sorts of little things that happen inside a day, inside a week, inside a month, inside a year, inside a decade even. Our job as traders is to recognize those and take advantage of them. So that's exactly what we're doing here. We're trying to establish a pattern in pound US dollar that happens more often than it doesn't. That's what a trading system is all about. So that's exactly what we're trying to do. So if you wish, you could use, let's say, in US Open, and we'll probably do this in the US session at some stage when I get the journal sorted out. We'll likely use dollar yen or dollar Swissy or dollar CAD as a breakout strategy, same sort of thing, when the liquidity comes in. There you go. Naveen, that's you preempted my question or my statement. That's exactly what we will be doing. We don't know what pair yet. Maybe dollar yen, but we'll see. Could be different. All right. So have you got something urgent, mate, or we go quickly through yesterday's trade?
Yeah, we yesterday. Which the FTSE you talking about, or
no, the pound
the pound? Yeah, let's do that, and then we can analyze the FTSE. The FTSE looks like it's going to ease up right now, but there's a few flags that we need to be aware of. So we'll come to that in a moment. Yeah, you shoot though, mate, and we'll come back to it in a second.
Cool. So yesterday's trade on this system was trading the breakout of this bar, and this bar. So that was the range. We had an entry 15 pips above the high of this bar, which is the top of the range, and an entry short 15 below the low of this bar. We got triggered long, and as soon as we get triggered long on the hourly chart, we switch to the 15-minute chart, and we trail two buyer bars. Why buyer bars? Because we're going long into the market. We've entered long into the market, and we entered long on this bar here, I believe it was. And as soon as that happens, we then set a trailing stop, or we manually trail the stop with two buying bars. We don't count the bar we triggered on. The next bars are the ones we count. So we got one bar here, one black bar, no trail. Then we got buyer bar, buyer bar. So two buyer bars in a row. Immediately we move our stops from where they were down here up to underneath those two buyer bars. Pardon me. And we just continue on with that until we're taken out. So we got another two buyer bars here. Stops move to under that bar. Another two buyer bars here. Stops move to under that bar. Another two buyer bars here. Stops move to under that buyer bar. Then that was as good as it got. So no, was it? Can't remember now. No, we got up to here, didn't we? So we're under these two. Then we got two blacks, one white, two blacks, two whites without our stop loss, which was here, don't forget, didn't get taken out. And then we moved our stop up to here. And we're still going. Gee, we had a better day than I thought. Then we had another 2 buy bars here. So that was the next one. Another 2 buy bars here. That was the next one. And we didn't get any more. So that was that one there was your stop loss, and that got hit. So out of all of that, we got about, I think it was very close to we got about 40 odd pips, better than a kick in the bum, as I always say. And of course, if you were in the show yesterday, you would have been triggered long on the 4-hour chart, which I took on another account, that one here. I've still got my stops at their normal position at this point, but I have taken profit here, and you can see the line where I said to take profit, guys. Hopefully you followed that order and are now pretty much risk-free in this trade. And if we do get a breakout here, we could be in a very strong position, because if this breaks, it will go. And it will go, in my humble opinion, at the very least, to that level there, and potentially take on these highs again. Because this could be a very, very quick, isn't it? You can hardly even call it a V shape, but it could be a very, very quick response to those seller bars that we saw a few weeks ago. Interesting, very, very interesting. And this would not surprise me at all if that were the case. So we could be in a good spot here. All right, mate, there you go. That's both of the trades from yesterday taken care of. And you should be in a position for both of them to be winners, guys.
Brilliant. Well done, mate. Okay. Should we get back to the FTSE for a short period?
Absolutely. Helen, to answer your question, we will go around the grounds on all the pairs that I'm looking at in the not too distant future, both 4-hour and 1 hour. Yep.
Okay, so FTSE, we're at 3. So this is what we got. We are right at the top of the range here with the FTSE, and there's a decent chance it's going to break out. Just checking under the hood, we got around about 90% of stocks all in positive territory in the first near 15 minutes of the session, and looks like a bullish sentiment will probably continue. Let's look at these on longer term timeframes, however, because this is probably going to give us a much cleaner picture than what's happening on the hourly. So this is the 4-hourly chart, and the 4-hourly chart really does probably give us this area here. So we're just a few pips away from that. So we are really at the top end of this smaller range, if you like, but there's also this range down here that we need to be aware of. And if that is to break out, then that's probably going to give us, and it's not bad practice at this stage to do some measured moves on all this stuff. So measured move on this one is going to lead us to around about this point up here, which would give us something like 6,002. So that does lead us back into this near this gap area. So we've got a bit of room really to make a decision if we want to go long, really between this point and this point. So we got a bit of time at this stage. We were talking about the cup and handle before. There's always a few different ways to trade any pattern. If you're in at the lows, then you're either you're taking profit here and waiting for a breakout, and that's really what we've got going on right now. That we can't trade here, or we shouldn't trade here, because even the pattern has got at least a 60% chance of failing, because we are hitting resistance. So resistance has got a pretty high chance of holding. So there's still a chance that this pattern just fails. But the only way to get confirmation that the pattern is going to play out is if we get a breakout and a hold above this level. So we're looking at this on a 4-hour chart. So really, I would like to see this develop on over the next 4 hours. Yesterday's daily bar was pretty positive. It swallowed up the previous day's negativity. So it does kind of put us in bull market territory, and also the S&P closed 20% up. Now, if you want a definition of what the market seems to deem bulls and bear markets, if it closes below a level by 20%, they consider it a bear market. If it closes above a level by 20%, they consider it a bull market. So we are now 20% up from the lows on the S&P, the FTSE, the Dow, and everything else. So we are starting to hit bull market territory anyway. So we should be looking at the longs if we can get on board. But that's the daily chart. Now, I would still like to see what happens with this bar, because this bar really does need to close above this level to confirm that we are actually taking out this area here. Now, this area here, this particular bar here, you know, you must be able to recognize that there's going to be a lot of stops sat just above this bar. So if this market is to go, it might go fairly fast. You know, starting to get above that. So this is the price action of the bar on an hourly chart. So if it starts to get too high up, it's going to start taking people's stops out and probably rush up to the next level fairly rapidly. So you know, don't know exactly where those people's stops are. This is a daily chart. Sorry, this one here. It's a daily chart, so the stops won't be 1 pip just above. There'll probably be something like anything between 10 and 20 pips just above. So we'll see whether those positions get covered and we continue to move to the upside. But right now it's looking fairly strong. It is quite keen to go. This is still a pretty cheap price down here. So a breakout to the upside down here wouldn't be the most astonishing thing in the world. And we might need to be on top of that if this market all of a sudden starts to explode. We may as well get on board with it. So the weekly chart is the other one that I think is of interest, because let's just take this line away a second. This is what we've had for the last 2 weeks prior to today. Now, today's bar is not representative of what's going to happen at the close of the week as yet. So it will be when the week closes, but it's not yet. This bar last week was pretty negative. The bar from the previous week showed that there is some resistance in this area. So we're right on top of resistance here, and it's going to be extremely dangerous to try and get involved to the upside. In saying that, you know, if you can put on a little bit at this particular area just to kind of cover anything that does expose to the upside, then it will be worth doing. But you might have to you know, keep stops fairly loose, and you'd want to go down to an hourly chart. But you know, right now your stops would probably have to be down to at least this level here. So you're looking at a stop of around about 120 pips. So that's fairly wide for the stops right now, but maybe in the current climate not that wide. I wouldn't recommend it. You know, I think if the market does go up, it's still got a chance to come down. Let's see what could bring it back down again. And we are looking really at the data points of the day. And the data points of the day, we got OPEC meetings all day. One of the reasons that the market seems to be fairly bullish right now is that Russia appears to have agreed to I think it was a 9% cut. It might be 15%, but they've agreed to a fairly significant cut in production. So that's dragging some of the oil and energy stocks higher in the FTSE. So that's looking pretty good. We got ECB money policy meetings accounts as well. And obviously the kind of big numbers in unemployment from the US, and they are looking for 500,000, is that, or 5 million? I think they're looking for 5 million.
Yeah, that's 5 million.
They're looking at 5 million claims of employment. Whether that drags the market down or not is really a big question, because sometimes
up to 15 in the last 3 weeks.
I mean, it's a crazy number, and you know, for that reason, I do remain bearish on the overall picture with the market. But if it wants to go right now, then you know, we've got to let it go. The underlying fundamentals of the market are weak, so you know, to suggest that the market is going to get back into bull market territory and then get back to the highs, I think would be pretty foolish. You know, we've still got to play the downside, but this is where the market is tricky, because sometimes it can confound you why it goes in a specific area after, you know, considering what everybody knows that's out there. This market should really be, you know, suppressed really at the very best, and you know, rallying is just just a bit of a surprise. But that's what the market does, you know. So monetary minutes from the Fed yesterday were received well. We had Trump out, which I'm not sure what he said actually, but we'll have to go in and see if we can find that out. But things are being received pretty well. You know, the market is enjoying what's happening with the Fed. They like all the policy announcements and the policies that are being implemented. So as the market is doing that, it continues to ease the upside, surprising everybody. But what we do not want is to get caught on the hop with everybody else that gets overconfident and thinks that everything's back to normal and fine again when we know it's not. Trade long without really protecting ourselves, which again, if we are going to trade long, we'll put the stops loose to start with. And if it starts to move, then we're going to start using a 15-minute chart really to track the trend, because what we do not want is to get into the weekend and then all of a sudden on Monday find that we've got a gap to the downside. So we'll probably take profit whatever happens by the end of today. So looks like we might be looking to get long at some point, mate, but it's just not comfortable at this stage.
Mate, what sort of traders do you think are long here, and why?
Well, this is the interesting thing, isn't it? And I suppose it's quite tricky, really, to guess who it is. I mean, I know that there are retail traders that are out there that have taken loans out to get into this market. I think at the lower end, you know, that the certainly down here there was institutes getting involved, and maybe even at this particular point is the institutes getting involved because, you know, to their mind this is cheap money. You know, the market is likely to rally to this point at, you know, at some juncture. Now, whether it does it before it comes down first, I don't know, but it's a fairly decent assumption that it's
in my book. You know,
what's that, buddy?
2025 in my book.
Yeah, well, this is the thing, isn't it?
But you know, I'm stunned it's rallying at all.
Yes, I mean, me too. But that's just the nature of the beast, isn't it? Which is what makes trading such an interesting challenge. And you know, having a longer term view of the world and the markets is a great way to be, because it can, you know, take out all the noise. But in saying that, the noise also provides opportunities, and I think, you know, we can see that the opportunity right now appears to be to the upside. So who's involved in here? I would suspect there's a lot of retail traders, but I would expect there's some money makers in here as well, and some market makers in here as well. And you know, this is where they may be lulling everybody into a false sense of security, drive the market back up again to these points, get out the market and dump all their shares on all the uneducated money. And then just picking it back up again after making all that profit. So they're probably waiting for a couple of waves.
That's why I like this level. I think it's really a great point for a false breakout here.
Yeah, I agree with you, mate. I agree with you. And this is why this makes it very, very tricky. And this is why if we're going to trade it, we've got to trade it on a short time frame. Just enjoy effectively a trade rather than a trade / investment. You know, if we're going to get involved, it does look like the market is giving us a fairly easy opportunity at this stage, because it's just so keen to go higher. I also wonder whether the holiday break is playing a part as well. You know, people just sort of getting into the market and enjoying an Easter break, and then we come into next week and it comes back down
that's
again.
A thing
but
too, isn't it? Buy into holidays. It's a
yes,
thing.
exactly. But you know what? Not Easter, sorry. April tends to be a pretty good month for the FTSE and the markets generally. So there's a lot in its favour here.
How much do we put into seasonals at the moment? Actually, that's another question I wanted to ask you, because you follow seasonals. How are they doing, seasonals?
Well, I suppose
they'd be having a bad time, I would have thought.
It's a bit. Some of them have worked out well, because there are some, you know, bearish kind of moves at the start of the year, but some of them haven't worked out so well. But I think now the market's calmed down a bit, we might start to see those seasonals play in, because we know that the summer tends to be a bad month. So I wonder whether we can go higher, and then you know, during the summer we that's when the real shorts kick in. StarMax. So based on yesterday's candle, the FTSE, the S&P and the Dow need to be bearish. Oh, well, this is the thing. Why it's bullish right now is really, that's what we're discussing. I mean, there's a few reasons. There's a few reasons it's bullish right now. I think the underlying reason that it's bullish right now is because of the stimulus packages that have continued to be flown and thrown at the market. Because the last financial crash that we had, I think it was QE2 or maybe QE3, was when the market really started to rally. But what we don't know, and the market started to rally, and also we actually started to see it take effect. Now that was the key aspect. So at the minute, people are speculating that the money, the stimulus packages are going to work, but we haven't had data.
And I think, Ash, that this virus is stabilizing in terms of numbers.
Well,
I think that's helping as well. But I
do you
think
know
it's
what,
all
mate?
BS.
I think that's another interesting aspect of the story because it appears to me that it really does depend on which account of the virus we focus on, because I'm hearing varying degrees of of that, and also if countries are starting to ease lockdown, surely without a vaccination, it's just going to come back again. Now, whether it comes
Yes,
back
without a doubt, yeah.
Yeah, and the UK government's initial strategy was to put people into lockdown, let them out, put them back into lockdown, let them out, and try and create some kind of immunity to it. So people will be going back and forth to work in waves, apparently. So maybe that becomes the strategy. US is reaching the 500K mark. Do you know that the US the strategy worries me the most, actually, and as the probably the biggest or the second biggest player in the game.
Strategy is to blame who? Come
well,
on.
Well, this is the thing, but Donald
it's not
Trump
about
wants,
blame. It's about fix the bloody thing.
yeah,
get
well,
it contained.
he just wants people back to work, doesn't he? It doesn't
Yeah.
bode well for him. So
No.
So he's trying to get people back as much as they possibly can. But what we got to be careful of is not to get lulled into a false sense of security. If we're going to trade this smart, we will take advantage if the market wants to go higher. But let's keep the mindfulness that the underlying fundamentals are still poor and bad. And I suspect even if we do rally, as the sun shines and the holidays come, we play this, fairly conservatively, take a few chunks out of the market as it goes up.
I think that's the key. You just pick your poison.
Yeah.
Go in with little bites and take them as often as you can.
Yeah.
But don't. I mean, Chandru, Google bull trap right now. That's where I think this market is right now. It's in a bull trap.
Yeah, I agree with that. But Jeff and I are speculating as like everybody else.
Of course,
but that's just
don't put your house on that. But
no. but I have to say, mate. But one of the reasons that I'm looking at it that way is because the fundamental data is still poor. So if the market is rallying because of stimulus and it's rallying because people are easing back on lockdown measures, that's all well and good. But at this stage, that hasn't been reflected in the numbers. And until that's reflected in the numbers, I won't be convinced that we should be confident about buying. So call it what you want, I suppose, at this stage. Is it a relief rally? Possibly. Is it speculation that actually things are going to be all right and all those people that got in down here are going to be sitting pretty if it works out to be that way? Well, yeah, I mean, that certainly will happen. Or is it just a case that that we've got retail traders that have borrowed a load of money to get into the market, and the big players are sat on the sidelines waiting for their opportunity to dump back in when the price is high enough again, and we tank to the downside. It's difficult to know, but I am following the data, but at the same token, I'm following the charts. The charts are saying up, the data's saying down. So when the charts change back to downside again, I reckon we probably come down hard. But there was a small opportunity yesterday to suggest that that was happening, and it hasn't. So I think there's probably going to be a little bit of dipping the toe in the market as we get higher. But yeah, tricky one anyway, mate. You know, these are the challenges. These are the challenges of traders. But you know what? The most important thing, you know, that yesterday would count that a loss for me with the FTSE. If you've taken the stops where we were talking about. So if you guys are taking an hourly trade, then we've got a loss here. We're entering here. Some of you may have taken half off and made it a break-even trade. I don't know how you guys trade, but let's say that we were aiming down. I think it was here. I was looking at maybe. Yeah, we were aiming down here. That would count as a loss. And you know, there's probably going to be a few of these on the way. But if it does come down, if I am right about the theory that this market is going to be in trouble, we only need to hit one of these. It's going to make up for all those little losses and some. So I'm going to continue to look for downside signals, and they're the ones I'll load in on. The ones to the upside, I will just take a few bites out of and see if there's anything on offer for me. But I am bearish on this market, and I haven't changed my view. There's nothing as yet to change my view. But technically speaking, and the way that the barometers are going, i.e. the amount of stocks in positive or negative territory on the last few day-to-day basis, you know, we're looking today at 95% of stocks in positive territory. We got 3 flat and only 2 moving to the downside, and even those are less than 1%. So we are in an incredibly confident market right now, which is probably the most dangerous market to be involved in some respects. So, just have to wait and see, mate.
Yeah, look, great question, Chandru. We keep on thinking still going down, but we've recovered 50%. Two ways that I'm going to answer that. One is do exactly as Ash has just said. If you see a bull market or a bull momentum, trade it, but don't trade it with the house on the board, right? You can just keep your risk very, very small. The other thing is that this cannot be sustainable. It doesn't. It would defy logic, and to my mind, it would defy gravity and all sorts of things if we continue to rally. It doesn't make any sense at all. But because until we find an answer, aka vaccine or whatever they come up with, this ain't going up. I'll be stunned, surprised. You can kick me in the butt and you can do whatever you like with me. But if this goes up until we find or before we find a solution to the problems that we've got, I'll give you my address. You can come and put a knife to my throat or something. But you know, you've got to trade sensibly. You can't speculate that, okay, this is going to here, hell in the handbasket and put your house on it. You just can't do that because the market will take it straight off you and then
and that's the thing.
And then do exactly like you thought it would.
Yeah, that's the thing. You know, it's always this is always the trickiest phase in my opinion as well. When we look at a market which is unrelenting. As we saw, as it came to the downside, we're looking at this on the downside. When it was when the market was coming down and it was unrelenting and unrelenting and unrelenting, it look at the opportunities that it looked like it was providing back to the upside, but then bang, same thing happened, and then bang, the same thing. Even here it looked like it had turned and the same thing happened. So yes, it bottomed out down here. And now it's kind of like, now it's moving in the opposite direction, and we're at this particular phase. But these are really tricky markets, and this is the problem. You might try and grab onto some upside, and people are going to get, every time that there's something significant in price action movement, people are going to get spooked, and it might just take a bit of a spooking really kind of start a genuine move back to the downside. But it's, right now there's no question that the movements that is unrelenting to the upside, and it's attempting now to get through this level. Let's move that up just a little bit, because that's the highest point just there. It's attempting now to get back through this level. You can see this on a 15-minute chart here. Not particularly bearish, but look at it. It's just wants to go and wants to go and wants to go. And it might just be one of those days today. It might be one of those days that just keeps going and keeps going and keeps going. And then all of a sudden, unemployment claims come out, or the last half an hour of the day, whatever it is, all of a sudden something comes out. Everybody gets burned because they're looking for the next leg up. And the market just drops like a knife. So what do you do here? That's the big question. My personal approach at this stage is, because these are the most dangerous moments to trade the market, the best thing to do, if you're not in already, let it go, or trade any kind of dip on a short-term time frame. Keep stops fairly tight and see if you can get some of the rally. I mean, you're not going to trade this particular breakout, but markets come back. Even when it's coming down hard, as I just showed you, even when it's coming down hard over here, when there's the absolute fear in the market, there was still moments where the market comes back, and there's still this moment the market comes back. So so at this stage, the best thing to do, just let it go. If it's going to break out, let it break out, let it do its thing, and provide an opportunity later down the line. But yeah, difficult one really here, mate. And I think because it is difficult, we just got to let it go.
Yeah, look, I get a bit frustrated, I suppose, by not being able to be in over the shoulder of people at this time, because I mean, you can say as much as you want, both you and I, as backing up our experience. But, guys, to be absolutely honest with you, and I hope we are at all times, I've never been through this before. This is new territory. This is absolutely the most incredible scenario. And I'm not talking market conditions, but that flows to market conditions. I've never been through a pandemic of this nature, or this size, or this dimension, or the reaction to it, or the precautions that have been put in place. So I really can't tell you what is going to happen next. But what and nobody can. But what I can say is I'm having an absolute ball at the moment, and the reason is that I'm just waiting for what I think might happen in terms of what the fundamentals are telling me to line up with what my charts are telling me. And really, isn't that what we should be doing all the time anyway?
Oh, mate, totally.
And when that occurs, I'm just putting an entry into the market. But I've got to tell you, I'm not putting 1 or 2% or 3% into the market at any stage. Maybe quarter, maximum half.
Yeah.
Because I really don't know what's going to happen next. And I've seen some classic setups that, normally I'd load up on. I'm just not doing that because I don't think that's a wise thing to do.
No, I agree, mate. I agree.
But I'm trading exactly the way that I trade every single time. And I've got to tell you, the volatility at the moment is suiting me right down to the ground, having an absolute ball in the market. It's crazy.
Yeah, which is brilliant. The sentiment. So, where is my sentiment?
Yeah, look, I think it's perfect, Helen. When we spoke about this yesterday, I think it's absolutely spot on. And I may even turn into a footsie trader by the end of today.
I think I've got a sentiment cycle in here. Where's my sentiment? No, I'm not sure I'll put my...
Well, while you're finding it, I better have a look at some charts, mate, because it's way past the hour. Way past the bottom of the hour.
Oh, you got to give me more of a nudge, mate.
Oh, how would I do that? We've been in a good conversation. I think it's very important.
Yeah.
Righto, let's Geo. Firstly, the pound breakout trade hasn't triggered. So that's number one. You should be able to see that in my chart by now. Let's go through the charts and see.
One question, Jeff.
Yeah.
Do you ever trade the Norwegian kroner?
No, but I know Chloe does.
I think it's a fascinating one right now with this oil story.
Okay. Yep.
I don't know if you got the don't know if you got that option to trade it, but maybe you should start looking at. You know,
I do have that option. Yeah.
Yeah, maybe we can start looking at the Corona as well.
You might see that I've got the Nasdaq on my chart as well, and I have never traded the Nasdaq in my life, but I've got a little bit of a bearish look at it at the moment. It's interesting. Chandru, yes, mate. To answer your question, I'm a massive Aussie bull, and I've been broadcasting that for quite some time. So, yeah, I'm on board with that. Right, what do we got? We've got what cross is this? The pound, obviously, right? Okay, you can see that we've gone into a big range on the pound, and the trade that we took yesterday, which was trading. I can't remember this candle here, maybe, I think. And we had to take profit at plus 40 pips, I think it was, which is where I've got that line there. TP2 is here at around about 125.67. And you kind of want to start thinking about a decent pullback in this area. So up to you if you want to do that. It is a great time to learn to trade, John. I absolutely agree with you. You're in a very good position if you're just starting now. This is absolutely something that really interests me because this is going to break out. And when it does, it's going to go a distance. I don't know which way that's going to be. But being in the long at the moment kind of makes sense. Reason I say that is because I expect the dollar will not only fall, I think the dollar will fall out of the sky at some stage. I don't know when that's going to be, but I'm extremely bearish on the dollar. So I'm going to be looking to trade just about anything against it for quite some time. Now is not the time, I've got to say, because I think it's going to go up, down, and all sorts of places. I think it'll be very, very volatile. I'll use that word for some time to come. But gee, I want to be on the high side of pound, Aussie, Kiwi, anything against it when the time comes. So I'll be looking to take little bites into this as we go. Maybe this is the first of them. I don't know. But at least we should be trading relatively risk-free, if not risk-free in this at the moment. What else have we got? Let's start at the beginning, shall we? Pound Aussie. And there, guys, on the left-hand side of my chart, if you haven't joined the what's it called? Telegram group, that's where you'll find not only Ash and myself, but pretty much the whole senior trading team in Actions to Wealth put comments in there and sometimes trades, but very, very good place for you to be for nothing. Go there if you haven't already done that. Join that Telegram group. So nothing's changed on Pound Aussie. We've still got a target down here. The market has tried its little heart out to reverse this situation and continues to fail. That's good, of course. And I would hope by tomorrow morning that we're down to this level. And that's where I'll take my next lot of profit off the table, around about the 197.45 mark. What will I do then? Two things. I'll move my stops to above the monthly pivot. And I will also wait for this to break through this level and retest it. The instant it retests it and doesn't come back above it, I will place another order short. And I'll be taking profit at strategic levels here, but then that's it. I'll let it go. And I think there's a massive potential reward if we actually get this right. We've got to manage it right, of course. And that's the tricky part. In a volatile market, where do you leave your stops? Where do you put your stops? If you really got kahunas, you probably leave your stops where they are and let the money mount and mount and mount and mount and mount. Who's got that many kahunas when they get into 1,500 pips of profit not to move their stops or at least put something in the bank? That's going to be the challenge if this works out. If it doesn't work out, then so be it. But I think that's got a very, very strong potential, as does Euro Aussie, which is exactly the same. My stops at the moment, I think I'll leave those for a little bit. I'll probably change that tomorrow morning when I wake up and see that we've got a flat market. But at this point in time, I think Euro Aussie, where is my stop loss at the moment? Euro Aussie, I haven't got that chart here. I haven't got that platform, sorry. But I think that's probably it, actually. That's probably where my stop is. No, it wouldn't be. It'd be above the weekly pivot, I think. If you're not in these trades, and that's why I hate being on public record, I suppose, because if you're not in these trades, you kind of go, well, why am I not in that trade? I used to be like that all the time with my mentor. He used to be in a trade, making money. And I'm going, well, I got stopped out here, buddy. How did that work? I got stopped out by a pip and, he's making lots of money. That's why I hesitate to say too much about the trades that I'm in. But the reality is we've had one leg down, a second leg down. I think there's another retracement in order. When, don't know. But I think there's an opportunity to sell this again when that retracement happens. And you can see where my obvious target is down here at the 160, about 1.66, I would imagine. That's going to be a massive result if that comes off as well. What else have I got? So on both those pairs, I think there's room to get back in or to get in if you're not in. But I wouldn't be looking to get into this one probably now until we get through that level and retest it. That's pound Aussie, Euro Aussie. Wait for a retracement and sell the rally. Pound CAD, I'm actually still in that, or am I? Yes, I am, but barely. I've moved my stops on this one above this swing, and I'm at no risk because I've moved the stops. I took a third off the position down here, and if it hits our stop, it'll be just break even, basically. I think this has still got potential to keep going as well, pound CAD, but it depends a whole lot on oil at the end of the day. If oil rallies, then pound CAD should continue its downward trek. If pound comes off, if oil comes off, then we're out of here, and we're out of here pretty fast. And this will just rally and take on the highs pretty quickly, back up to 1.8, I would think. So if you're trading anything against the CAD today and you're not safe in the market, I would suggest you probably have a look at that, because you're probably in for a pretty interesting ride, given that there are some numbers coming out on the CAD as well as these OPEC meetings that we're in currently. What else have we got? I might as well deal with CAD Swissy while we're here. We got into CAD Swissy last week at some stage where we traded at this level. The stops are at entry at the moment, pretty much. The gap's closed. This has got huge potential as well, but again, relies very much on what oil's doing. And I won't go through that again. Obviously, if oil rallies, the CAD Swissy is going to be in good shape. And if we get up to here, happy days. Pound CAD I've spoken about. CAD Swissy back to this one. CAD Swissy there. CAD Yen. Now, we're also in CAD Yen. As I said, I've never been in so many trades in all my life. At the moment, it's just going nuts. And we are now, we've taken profit up here. We're still at slight risk on this one, but I do like the fact that we're holding above the monthly pivot. If we, again, if there's a lot of ifs about oil at the moment, I think today might be a turning point for oil. If it goes the way of the OPEC meetings being positive for their side, in other words, cut production or whatever they do, then this should rally. If they say, no, bugger you guys, bugger you, Donald, we're just going to keep pumping oil and try and take as much market share as we can, then you'll find this will be down here somewhere. But I do like the fact that we've come back inside the bigger picture range. That range has been established over a long period of time, back to 2015. And we are back inside it. We haven't really closed above it. and retested it. And that's why this is still a little bit tricky. And that's very, very early into this. It wouldn't surprise me if we do get taken out at some stage, but I'll certainly be looking for that to change as well. If you're not in this trade at the moment, then 30-minute charts are kind of setting up for us, but they're not there yet. We're in a bit of a pennant situation. We've got a trend line coming from here. We've got a resistance trend line coming from here. So we're almost at breakout point. And as I've said, the OPEC meetings are going to change this dramatically, whichever way it goes. I hope it goes our way, of course. But we've been at entry pretty much the whole time that we've been in this trade. It's been pretty crazy, actually. We've been up and down, up and down, up and down. And guess what? We're just above entry at the moment. We have taken profit up here, of course, as I said, and hopefully that will continue our way. One I do want to get into, and I'm really keen to get into it, it is Euro pound short. This is the 4-hour chart. And really, I don't see me getting into this until the following happens. And this is very much the case with the way I trade all the time. So you'll see this a lot from me, guys. We're in a range, very clearly, a box range at the moment. And the way I like to trade box ranges is when I see the bottom of a range and a higher low, then I like to trade up to the top of the range. When I see it get to the top of the range, I like to see it do exactly the reverse. So hit the top, get a lower high, and trade it to the bottom of the range. So that's exactly what I'm looking at here. What I need to see to actually get serious about this, and the reason I didn't trade this bar, the reason I didn't trade this bar is because of this thing, the monthly pivot being untested above us. This really is an excellent opportunity, in my humble opinion, to get short. But I don't get short here. I've got to wait till we break resistance, again, back underneath it, retest it. Then I can enter here and look for the bottom of the range. But this still spooks me. So even if that does set up, I would much prefer to go in very, very light here at, 0.25% maximum, just in case it turns around and goes back to where I think it belonged in the first place. So there's the absolute best place to find a short. Here's the second best place to find a short, right here. So go in light here. If we're right, we can always scale back in if we get something like that happening. If we get it wrong, we're not going to lose too much. So euro pound, I'm a massive bear. I am a massive bear, I've got to say that. But it may just be a little bit early to get into that. So that's kind of the way I'm going to trade this. If I go down to the 30-minute chart and am prepared to risk the trade back to that area where I think it will go, then there are possibilities. There's always possibilities, but we've got to have the right scenario. And when I look at this chart, I see a flag pattern. Now, a flag pattern is suggesting to me that we're probably going to break to the low side. Actually, I should have put the flag in, shouldn't I? Let's do that. There's my little tool. That'll be enough for you, Ash.
I beg your pardon?
I said, there's my little tool. I said, that'll be enough of you. So what we've got here is a potential continuation pattern of the previous momentum. I don't think we've got previous momentum, though. So to me, it's not really valid. Is there momentum through here? Really, we've got a range inside a range, haven't we? So let me put that in as well. This might give you a pretty good idea of how I think. So really, instead of that being a flag for me suggesting downside, it becomes, and the reason is, okay, there's a little bit of momentum here on an intraday basis, but really we're in range, aren't we, at the end of the day? So what I'm really interested in is trading this back to here. And do I see an opportunity? Well, I always see opportunity if we break support. So if we break the support here and then get back above it, so something like this, break here, consolidate a bit, get back above the support, then retest it. Yippee. I'm off to the races. That's where I would enter. We've already had a test of the daily pivot, but we haven't had a break above the daily pivot. So I'd be cautious about that and look to maybe take something off the table here. So that might be a TP1 level. But if that sets up like that, euro pound, I think there's definitely a, pardon me, a little cheeky long to be had, and then wait for that to happen and enter there short and just keep it going. So I know that's a little bit complex, guys, but that's pretty much how I'll be approaching euro pound. If it goes now, it goes. There's no way I would trade this short from here. It's just not a high probability that will happen. Euro yen, not really interested in euro yen at the moment. Dollar yen I am, and I've got an order placed short on dollar yen. I'll explain that one to you if you want to have a look at that. Few reasons, but the major reason that I want to trade dollar yen short comes from a bigger time frame, and probably the weekly chart shows it best. Weekly chart showing me that this channel is being very, very good in that we're getting bounces off the bottom to the top, to the bottom, to the top, to the bottom, blah, blah, blah. Missed it here, but we didn't miss it here. And we didn't miss it when it came back. And we didn't miss it again. So what do we do as slingshot traders, if you like, or traders that follow my style of trading? We look for a lower high when we've come off the top. And we've got that lower high. Couldn't trade it because I don't like the candle. You'll very, very seldom see me trade a bear bar short. Just saying, that's the way I work. But what I do like here is the fact that we've had an approach of this trend line, pull back away from it, approach of this trend line, pull back away from it, approach of this trend line, pull back away from it. If my high gets taken out here, I won't switch, but I'll just take the order off. But whilst ever that high is in place, I think we've got an excellent chance of coming down to at least the weekly pivot and the monthly pivot. And if my analysis is correct and we're coming off the top of that bigger range, then we should see this go down maybe to here, but wouldn't it be nice if it got down to 100.79? That would be pretty handy if that plays out. So that's pretty much why I'm looking short dollar yen at the moment. And I hasten to add that this is, along with my absolute bearish nature on the dollar, but timing, no idea. I just know it's no, there's no such thing as no. I have this very strong feeling that at some stage we are going to see the US dollar collapse. When? Don't know. That doesn't mean put your house on it either. Swiss yen. Look, I was a little bit interested in this Swiss yen, but it's starting to conglomerate here or be too close together, pretty much like we're told not to do with COVID-19. I want to see it pull back away from here now. I'm very keen to get long this pair, but at the moment, it's just congregating in the same spot, and I don't like that. I want to see it pull back away, then maybe come back. Maybe there's an opportunity if we come back to the monthly pivot. There's a range forming here. I'm on a 4-hour chart. Maybe that's the way to trade it, but we've got Easter coming up as well, so maybe not. Aussie yen, I said to my guys this morning, buy the dips on the Aussie. I think the Aussie is in fine fettle now for many reasons, and I've been going over those for the last 2 weeks, maybe 3 weeks. I think the Aussie is now on a level playing field with the rest of the world, and a resource-rich country as China comes out of, or commodity-rich country as China comes out of lockdown, is a very, very strong thing in my humble opinion. And the fact that the RBA has now pretty much said they're not going to cut interest rates anymore, I just got a funny feeling the Aussie's going to get on fire, and it's starting to look to build momentum here. So I think buy the dips on the Aussie. Just pick your poison, pick your time. If you've got a nice little retracement on a bull run, then I think that would be an excellent opportunity. I was against trading the Aussie against the dollar for the last couple of weeks, and the reason, as I've said before, is I didn't trust the dollar, and I still don't to a large degree. It's very much flattened out, the dollar index, bang on 100. It got up to 103, went back down to I think 97, and it's now just staying absolutely bang on 100. So it's looking to do one of two things, obviously, and I just don't know which one will happen first. But my absolute bias is still to the short for the dollar. So I guess I'm giving you ideas, guys, but not a whole lot to trade at the moment. If you aren't in trades, then just be a little bit patient. But I think these setups are valid, and if they come, then jump on them, but at very small risk again, because the market is volatile. Doesn't look it at the moment, I've got to say, but because the volatility will come at some stage today, and probably that's something gets tweeted out of an OPEC meeting or whatever the case may be. We've got the ECB monetary policy minutes coming out. We've got unemployment rate from the CAD, unemployment claims from the dollar. You know, there's a whole lot happening. We've got Powell speaking again later as well, as I understand it. And it's Good Friday tomorrow. Gee whiz, there's a whole lot to think about, isn't there? But I think if you've got a system that puts you in the place that you want to be in terms of finding an entry, take it, but just be a little bit cautious on the risk side. NASDAQ. Okay. Sorry, mate. Very, very quickly, I did mention the NASDAQ, and this is not going to make a lot of sense to a lot of people. And where is it? There it is there. And I would cancel the order very, very. I'll just say as this much. I think it's at a strong resistance level. Resistance through here, support through here, a bit of a mess, but support and resistance through this level as well. Was a monthly pivot at one stage. It is about 83.25 something. Don't know that actually means anything. I've never traded this index in my entire life before, but what I see before me right now tells me that there's a very strong chance, if this high holds, and it's going to be under threat shortly by the look of it, but if this high holds, then I think there's a massive potential in this to continue that potential reversal. And there's a whole big gap right down here to this level in particular. So that's why I placed an order short on the NASDAQ. But I hasten to add, if this high gets taken out, then so does the trade. Sorry, mate. There you go.
Yeah, no, interesting trades on the Nasdaq and you know, taking trades on these indices. I just been reading the minutes from the Fed meeting, and it's pretty much what we were saying right across the board. In as much that you know, the U.S. economy did go into this global crisis in pretty good shape, but there are certainly indications that the pandemic is disrupting economic activity significantly, enough to cause some headwinds. But I wonder whether the statement that people are focusing on is the statement that the Fed is saying that they will use all of the tools in their arsenal to make sure that the UK consumer has the credit that they need, and maybe that's the thing, is that maybe some of the fear of the collapse is still managing to get massaged out a little bit by the statements. But the concern with all this, and it's been my concern from the start, is that they do actually run out of tools. You know, how low can interest rates go and be effective? How much money can they print and it be effective? How much stimulus can they add and it be effective? How many bonds can they buy and it be effective? Because you know, there is an argument to say that while the Fed are buying bonds, then consumers that are trying to put their money into safe havens just don't have that opportunity, because the Fed are significantly changing the prices and lowering the yields. You know, the bond price pushes up and it lowers the yields, and actually people don't have anywhere safe to put their money. And that could be another reason why people are still turning back to stocks. It's like, well, where else? You may as well. It might be one of those. You may as well go to stocks because nowhere. What's that, mate?
It very well may, but I can't help but think that most is a bad word. I can't help but think that the big guys are not ready to buy yet, and those who are buying are in many regards, and I don't mean to be disparaging in any way, shape, or form, because if you don't know what you're doing, you'll certainly make mistakes in the market. So it wouldn't surprise me if the people who are buying, and that's why I asked the question before, are not experienced in in these circumstances, and therefore turning, and this happens every single time we've got a financial issue across the globe. Those who have the money are out of this market. They're not in this market right now. And they're going to wait until the last possible minute and the lowest possible price. And then they're going to buy, and they're going to buy hard, and they're going to buy real hard. And then they're going to keep buying until all the people who've lost all their money can't get back into the market because the price is too high. Nothing has ever changed.
I think you're right, mate. I think you're right. It's just, maybe I suppose finding reasons why it is inflated. Why the market is inflated on air effectively is what I'm digging around for here. But it would suggest that maybe those Fed minutes are just calming things down somewhat. But let's see. When the actual data comes through, let's see what happens, and let's see what the next reaction is going to be, because that's going to be the key, isn't it? They can fire what they want at the market, but if it starts to, if it has a diminishing effect, there's going to be huge concern. So gold is pushing up to 17,000 again, mate. Wow. Okay, so there's people are buying stocks and gold alongside it yet again to make sure that there's some protection out there at the same time.
It's all very interesting. Very, very interesting. Just hold your nerve, guys. And don't put your house in the market. It's pretty much that simple.
Yeah, I think so, mate. All right, well, let's push off because we got the unemployment claims later on. I believe they're going to be released at 3:00, so we will be on air during that time. Just finishing up. Sorry, no, not unemployment claims at 3:00. We got Fed Chair Powell at 3:00. We got unemployment claims at 1:30. So we'll be on half an hour after that announcement is made, and we'll see what opportunity that does provide. I think we need to wait for that number before we commit anything in the market. Maybe it drives it down, or maybe it's enough to suggest that the market is actually going to take its next leg up from that point. But I think we need to wait for that and then see what people want to do into the weekend.
Yep. Okay. No entry on the pound breakout traders yet. I actually quite like it when it doesn't break out early, because it's building up a little bit of momentum there. And if we do get it on the right side of things here, it's likely to go a distance. Hopefully that's the case.
Brilliant stuff. All right.
So guys,
safe trading, guys.
If you can't be with us later in the US show, which starts at 9 o'clock. 9 o'clock. Hong Kong, Singapore. Then have a wonderful Zoom weekend.
Next week.
Stay safe. Sorry?
Is it going to be on Zoom next week, that show?
I don't... on Zoom, yes. Not on YouTube, as I understand it.
Yeah, okay.
So next week. No, the second week is on YouTube, I think.
Next week, 2 weeks on YouTube. Okay, great.
Yep.
All right. Fantastic. All right. Well, we'll be back, same trade time, same trade channel on Monday. No, we won't. It's Bank Holiday Monday, isn't it?
Yeah, it is. Yep.
Okay, so Tuesday next week. Tuesday next week at 5 to 8 UK.
That's a date. Don't be late. UK doesn't work. Doesn't rhyme.
Sorry.
Have a great weekend, guys.
Yeah, have a good weekend. But we'll see you in the US show later.
You bet.